Hello. The company being analyzed today is Transrail Lighting Limited. This is a company which manufactures power poles. As you can see, it manufactures power distribution towers, among other things. So today we're going to analyze the company's financials, what it actually does, and its future growth outlook. So let's start. First, we have the market cap. Market cap of 9,536 crores. So a pretty big company. Current price of one share 710 rupees. Price to earnings ratio is 25. So market price is 25 times earnings. Return on capital employed is a very nice 35.2%, and return on equity is also a nice 21.6%. So pretty efficient in both these metrics. Then the profit and loss of the company. Here we have sales, operating profit margin. Pay attention to this operating profit margin. From 2020 all the way to 2025, we even have profit before tax and net profit. So in 2020, the company reported sales of 1,880 crores, operating profit of 278 CR. So we are dealing with a double margin, double operating profit margin company, 15%. This fluctuates. We go all the way to 2023. We see sales of 3,150 crores. Okay. Then we go all the way to 2025. Finally, we see sales of 5,308 CR, 776 CR of operating profit, bringing us to a net profit of 327 crores after paying taxes and everything. So these are the latest year's financials. Then, in terms of growth rate, you can see it's a fast growing company. In last 5 years, there has been a compounded growth rate of 23%, compounded sales growth. 3 years been 32. TTM translates to trailing 12 months. This is 47%. The last 12 months, the sales growth has been 47%. And compounded profit growth, the last 5 years has been 27%. Last 3 years has been 71% compounded. TTM last 12 months has been 55%. So fast growing. And in return equity, it's been steady and it's been rising 19%, now 22%, 19% 3 years ago. On the cash flow side, we will pay attention to cash flow from operating activities. You will notice the company is cash flow positive, but very fluctuating. As in 2020, 188 crores of operating cash flow declined severely over the next 2 years, 50 crores in 2022 operating cash flow. As you can see, 143 crores, dips again, 287 crores, March 2025. So it's a cash flow positive company, but not exactly high growing cash flows. Growth is still there. You can see growth has been there, but very volatile. Volatile is the main thing. And let's take a look at the corporate overview. So we're going to have a business overview. So first, transforming infrastructure. Okay. 4 decades of experience. Just below me written. 59 countries. Global footprint. Okay. 1.38 metric tons. Million tons. I think it's metric tons of towers. MT 1.38 million MT of electric towers have been supplied. Okay. 35,200 conductor kilometer transmission lines have been constructed. CKM. Different from KM. 1.95 lakh kilometers worth of conductors which are used on these, what you call, power distribution lines, power distribution towers. Conductors are used on them. That much has been supplied. 4.75 lakhs worth of poles, electric poles have been supplied. Okay. And currently has an unexecuted order book, meaning orders it has got from its customers. Unexecuted order book. It may not be the most clear here, but it's unexecuted. $1.8 billion worth of orders it still yet has to execute. All right. You can see power trading and distribution, civil construction, railways, poles and lighting, and solar EPC are the different business segments it has. So railways, it's not literally having a railway. No, no, no. Not even having trains, but providing some infrastructure support to railways. Okay. Now let's see the order book. Let me zoom in and we will zoom out. So order book has grown at a 25% CAGR. Okay, 14,551 crores of orders it already has from its customers. But this is spread over a few years. So you can divide it by a few years, whatever the execution timing is. Main thing to remember, order book, customers, they're actually getting more work. That's the main important thing. EBITDA has grown by 35% over the last, I think that's 4 years, 676 crores in fiscal 2025, 200 crores in quarter 1 fiscal year 2026 alone. You can see fast growing, 200 crores in 1 quarter only. Then for revenue, 20% profit after tax grown even faster, 327 crores, 106 crores in quarter 1 alone. So you can see the kind of growth we are talking about. So let me just move back a bit. Yes. Now let's continue. Global footprint. The company has a global footprint. These are the markets. You can see it's involved in so many markets, Africa being a very important market for them. Then we're going to talk about what it does. Now, we already discussed a bit of it in the business overview. We'll see a bit more. So main thing for them in this power transmission and distribution, these are the capabilities. I think you can't read them, but okay, it's all right. We don't need to know much about these. Rural electrification, underground cabling, manufacturing of towers, conductors, and monopoles, main thing. For railways, what do? They do earthwork, track lining, overhead electrification, stuff like that. For poles lighting, high mast street poles, traffic lights, they can do all of that. Solar EPC, this is a high growth segment, like overall speaking. Like in India, solar EPC is a high growth segment. In solar EPC, what do? Solar parks, they can make commercial, industrial solar, institutional solar, solar street lights, and civil construction, bridges, tunnels, elevated roads, and cooling towers. Okay, so they also make some civil construction projects, some construction there. Then let's take a look at the order inflow. We already saw that the orders we're getting from customers is already on the rise, but let's go a bit deeper. So in quarter 1 fiscal year 2026 alone, they had an order inflow of 1,748 crores, year on year, 72% growth. See this power and trading, this blue one. So power trading and distribution accounts for 97% of these order inflows. So majority of orders and majority of the revenues will be coming from power trading and distribution segment, with 79% coming from domestic, 21% of orders actually coming from outside exports. Then unexecuted, the one it actually still has. It has grown 44% year on year compared to last year. Like the total years, not quarter 1, the total that they actually have. This was the order inflows we did earlier. So the total they have 60% coming from domestic, 40% work is international. So international business has a substantial importance to them. Again, 93% coming from power trading and distribution, 4% coming from civil, and 2 and 1% others. So unexecuted order book plus L1. L1 is lowest bidding. The ones which they have the lowest bidding will be 15,637 crores as of June 30th, 2025. This is unexecuted order book plus L1, the orders in which they have the lowest bidding. It's 15,637 crores. So I don't exactly understand the difference. The main thing is it's rising and it's growing. It's big and it's rising. The international segment has an importance. Now, finance. Some more things about finance, especially on the credit side, the balance sheet health side. The debt to equity has been going down overall. Was 0.71 in fiscal year 2022, as of latest 0.37. So overall it has gone down. Return on capital employed has steadily risen, 14% in 2022. Now quarter 1 fiscal 2026, 27.47%. Net debt, net debt and net debt EBITDA. Net debt is total debt minus cash and cash equivalents. So the total debt minus cash and cash equivalents. In terms of crores, it has risen from 412 crores in fiscal year 2022 613 in quarter one fiscal year 2026, but has gone down from 2 two times. Net debt to EBITDA has gone down from 2 times to 0.77 times for fiscal year 2022 to quarter one fiscal year 2026. Working capital days, very important metric. Working capital days, lower the number of days, more efficient a company is. Working capital is the money, the assets and the liabilities which actually fund the day-to-day operations. So in how many days is the working capital actually converted into cash? Trade receivables, trade payables, inventory. How many days does it take to convert that into revenue? Lower it is, the better. Now you can see it has risen to 91 from 73 days to 91 days and currently at 76 days. Now, a major reason for this increase was they recently had the IPO. So they recently had the IPO. They got IPO funds. So the money that we got from IPO, it is actually included in the working capital. So the working capital increased a lot. That was majorly due to the IPO. So this gray one, this gray thing you see, 91 and 76 below them, the gray part, that is because of the IPO funds. It gets counted under working capital. Working capital of formalized current assets minus current liabilities. Another one is cash current assets minus cash current liabilities. But yeah, that is the thing about working capital. Finally, let's take a look at the CapEx, capital expenditure. The company is going for capital expenditure. Let's see the phase. So brownfield, meaning there's an existing facility, they're expanding the existing facility or making something very locationally very close to the existing facility. Greenfield, they're making a facility in a place somewhere new. So for brownfield, expansion of existing capacity, towers and conductors, they're expanding. One expansion is to be completed by quarter two fiscal year 26, which has already been done. Conductors by quarter one fiscal year 27, and for greenfield for phase one, quarter four fiscal year 26, and for phase two, both are brownfield, quarter one, quarter two fiscal year 26. What is the expansion? Pre capex for towers. Yes, this the upper one is a tower. Yes, upper one is a tower. Pre capex 84,000 MT per annum. MT is either million tons or metric tons, whichever. MT expanding to post capex phase 1 and 2, 1.96 MT per annum, metric tons maybe. So double capacity expansion. Main thing, double capacity expansion, how many towers it can produce. Same for conductors, 24,000 kilometers worth of conductors capacity was there, now 49,500 kilometers. So massive capacity expansion the company is also going for. Then industry overview, a slight industry overview. The Indian power and transmission and distribution EPC market. If you're wondering what EPC is, engineering, procurement, construction. Full form is engineering, procurement, construction. By the full form itself, by the term itself, you can get a bit of an understanding, right? You're engineering something, you're designing something. Procurement, you're procuring, you're getting the raw materials, the components for whatever you're engineering, and finally you're constructing. So EPC is when, for example, this we're talking about power, this transmission and distribution, right? In the same thing, let's see this tower. A client wants a tower like this. So the construction company, what they will do, they will engineer it, they will procure the material for it, they will construct this distribution tower, and they will then give it to the client. It comes under EPC, the client will pay for the entire project. So for this EPC segment, growth rate is expected to be 7 to 8% CAGR, industry growth rate, which is a decent CAGR growth, growing from $16 billion in 2025 to 20.5 to $21 billion in 2029. That is the estimate. That these are forecasts. Okay, these are forecasts. And what can provide this boost are renewable energy expansion, rising power demand, grid modernization. So not only new grids, but existing grids have to be modernized. Okay. Now, finally, let's come to some growth guidance. So here we have a script, a little script, the management of the company, whoever is working, the CFO, the CEO, they have given some statements. So first statement is, I would like to share that the market opportunity, the potential of the market as we see today for the next 12 months is around 1 lakh crores, 50,000 crores from India and 50,000 crores from international. Total opportunity that we see today, right now, as of now, the company sees is 1 lakh crores, split halfway between India and international segment. So international segment is still very important for them. They're looking to bid for at least 25,000 crores worth of projects in the next 3 to 4 months. And they're looking at a strike rate of 8 to 10% in terms of win rate. Okay, what does this mean? 25,000 crores worth of projects they're bidding for, and 8 to 10% is their historical win rate, or the win rate they're looking at in terms of win rate of what? Win rate of winning projects. So we're talking about 25,000 crores of, yeah, 25,000 crores of bids. If 8 to 10% of bids they actually win, we're looking at around 8% of 25,000 crores, or 10% 25,000 crores are the bids they can win out of this total 25,000 crores bids. That is so large addressable market. Large addressable market is the story we can take from here. And a good win rate, 8 to 10%, is another story we can take. And management may need to fulfill this. This is a target by management. So if results come for later quarters, let's see how successful they are. Final statement, and at the end of the segment is growth. What is the growth guidance? The company says that over a longer period of time, we are looking at what we had promised earlier in guidance of 20 to 25% growth. And we are in the same lines of guidance as we see today. So at the minimum, the company is guiding for 22 to 25% growth in revenues, profits, EBITDA, and all of that. The minimum growth rate, 22 to 25%, still for that high growing segment. It's aiming for high growing target it's aiming for. So that was it. That was, what was the company's name? Transrail Lighting Limited. Big company, strong growth in profits, strong growth in revenues. Debt situation seems to be improving. The net debt to equity and debt to equity and debt to EBITDA. Yeah, debt to equity was declining. Net debt to EBITDA was also declining. Cash flow positive, though cash flows are pretty volatile. And the international segment seems to be an important segment, even more important as we go towards the future. And the power trading and distribution products, those poles, those towers, those conductors seems to be the most important part of the business segment. And the industry as a whole is expected to grow moderately 7 to 8% because of various government initiatives like grid modernization, renewable energy targets, etc. That is it. Bye.